is Dr. Duru from Ahan Analytics with the market breadth. This week was pretty much all about SpaceX, its IPO, and the anticipation of the IPO. The price went out at 135. It opened at 150. It almost got to 177 at the high, and it closed around 161. So if you're lucky to get in at the IPO price, you made about 19%. And if you happen to get in at the open, you also made a little bit of change, a little less than 10%. Actually, maybe about 7 or 8%. But regardless, what I really like about this first day of trading are the ranges. So if it gets above the 177 point, well, then it's off to the races, off to orbit, right, for SpaceX. But of course, it faded from orbit and it faded all the way to 160. So that means that the intraday high at 177 or so is pretty much going to be a very tough spot to break out from. I'm going to presume that that's the top for this stock. And then the 135 IPO price, the 150 open price is also key because it goes below that. That means everybody who bought the stock after the open is in the red, and it puts the stock at risk of being sold down to the IPO price. And of course, for any IPO, that IPO price has to hold. Otherwise, it becomes a busted IPO, and then you have no idea how far it can fall before a bottom. So that sets the stage for the trading. I'm actually no touch on this. I'm just an observer. I'm just fascinated by the trading dynamics. But in the meantime, there were some other fades from orbit that I'm going to show in the individual stocks that I think are very important to keep an eye on. And at the same time, there's some consumer-facing stocks that are looking better and better and better. So it's like this weird rotation that keeps going on in the market from tech to consumer stocks to consumer non-discretionary, and so on. All right, let's just go ahead and take a look at these charts, starting, of course, with my favorite technical indicator, the percentage stocks trading above the 50-day moving average, because market breadth is a key fade from orbit. All right, let's take a look. All right, this is the percentage of stocks trading above their 50-day moving averages, what I like to call AT50 for above the 50. So this is what I mean by even market breadth fell from orbit. It launched higher, so this was good. I mean, it gained about 2.5 percentage points for a 4.8% gain, but it still couldn't break this downtrend. And this is the downtrend that's defined the bearishness for market breadth ever since it peaked at the overbought threshold in April. So unfortunately, I can't say market breadth is confirming any kind of bullishness. In fact, underlying technicals of the market still remain weak, but we're getting close. But I do not like this fade from orbit. All right, the percentage of stocks trading above their 200-day moving averages, which is the longer-term indicator, also just tantalizingly could not break through this important pivot spot. This level here, I've just marked it. It dates all the way back to early 2025 when the S&P 500 was hitting all-time highs back there, and it's just become this surprising but important pivot. And you can see how AT200 has pivoted around there, and it faded from that line as if it were resistance. So that, again, is not good in my book. All right, let's take a look at the indices. S&P 500. I earlier in a short talked about how it got close enough to 50-day moving average support. Look at that nice bounce. And so that is a very bullish sign, but it faded from orbit. The orbit in this case is trying to escape out of the 20-day moving average as resistance. That's that dashed line. So that's what I'm going to be looking for. And also remember the S&P 500 is still below its former double top. So it's technically bearish, but it's also bullish from that bounce off the 50-day moving average, which is the red line. So it's in limbo land right now. Don't know what to call it. NASDAQ, similar kind of story. In fact, this was even more powerful. You could see here that it tested the 50-day moving average 3 times along this uptrend, and each time survived. So this is successful. This is bullish for the NASDAQ, but it's far short of testing the 20-day moving average as resistance. So let's just call it there's some space there before that big test comes. And presumably that test will only come if the S&P 500 can also manage to break out above its 20-day moving average. So this is going to be more price action that's very interesting to watch, very critical to watch. And IWM, the ETF of small caps, this is fascinating because it is back to outperforming on a relative technical basis, and it actually hit all-time highs today. And this is the action of small caps is what was helping to drag up market breadth. So that's all good. And the VIX also faded from its own orbit. I noted this earlier. The steep VIX fade marked the beginning of the end of the selling pressure, and the bears taking control of the narrative. But you can see here that it's not quite back to um, the pre-tariff low, so it needs to get below that to confirm or even signal any kind of bullishness. All right, let's go into the individual stocks and ETFs. So let's just start, of course, thematically with Mars. This is the Round Hill Space and Technology ETF. There's a few space-related few space-related ETFs. I've just chosen this one because I like the way that it's kind of pivoting and holding on to this 50-day moving average support. I went ahead and bought some. You could see that there was already some hype going into the SpaceX IPO that petered out last month in May, and then just constant selling, near constant selling going into the IPO, except for this last burst here. This was a big run up, 11.5%. I don't get the trading psychology here when it's been selling off all the way into the IPO to rush in and buy ahead of the IPO, but the expected pullback happened and Mars fell back 8.1% today. Today, of course, is June 12th, 2026. I went ahead and bought right around the 50-day moving average, and this is going to be, I think it's going to be a long-term hold. At least I want to see if I can hold it for a retest of the all-time high. But I do think over the long term, space is going to be the next big investment theme, just like AI suddenly became a big investment theme over the last few years. Now, IGV, big fall from orbit. Ticker symbol IGV. This is iShares Expanded Tech Software ETF sector ETF. Broke down below its 200-day moving average is that blue line. But look at this. I like the way it's holding support at its 50-day moving average. So that is very, very encouraging to me. Let's just make it very clear here. So this is the hold of support. So that is very encouraging. I love that. And I went ahead and even though I have plenty of software stocks, individual stocks already, I went ahead and bought IGV, excuse me, at 50-day moving average support. And that's a trade. My individual stocks are holds for a little bit longer. So part of what was bringing down IGV is Microsoft, ticker symbol MSFT. A very important technical moment after breaking down below its 50-day moving average last week. Microsoft became bearish. This week it became bearish. But it's got one last key support that looks like it's trying to hold with these long tails here. Let me just zoom in so you can see it. So the long tails are holding the top of what was this breakout point. You can see the expanding fan. That's what I like to call it here, where Microsoft was really, the price range was expanding on its way down, and then it broke out, looked like it was ready to become bullish again. And then this, the dreaded abandoned baby top, where a big gap up and then a big gap down. Very ugly, particularly with a false breakout above the 200-day moving average. That was really a bear signal to sell or to short if I've ever seen one. But anyway, this is what was weighing down on IGV along with a bunch of other software stocks. But one in particular, Palantir, ticker symbol PLTR, I really want to call this into attention because this is kind of on the edge between being an AI play and a software play. And you can see what I drew some lines here. Palantir is teetering on a 52-week low. That is not what we want to see because there's a lot of air underneath that if that low breaks, who knows where Palantir will stop selling off. And you can see it's still under these double, triple tops, whatever you want to call them, from last year. So it is in a very, very precarious technical spot. And I just can't imagine tech being bullish while Palantir is selling off. It could happen, of course, but right now Palantir is in a very tough technical spot. So I've really got my eye on the fall from orbit for Palantir. Another software stock that was weighing on IGV is Oracle Corporation, ticker symbol ORCL. You can see how conveniently when Oracle broke out bullishly above its 200-day moving average, it stopped just short of its former all-time high. This former all-time high was the breakout in that big 30% plus, 36% post-earnings move that marked the top for Oracle last September, and it has not recovered since. And it looks like the current recovery has come to an end because Oracle gapped down 8.5% post earnings and is still struggling to get back above its 50-day moving average. Until it does, it is now in bearish territory. I am, of course, keeping an eye on it. I would love to buy Oracle again if it gets above its 200-day moving average. Presumably that will hold as a bullish breakout. Zoom Communications. I know you all think I'm just obsessed with this stock, ticker symbol ZM. All I'll say is that it's now broken. It's the bullish breakout is officially over. It's now not just below the breakout line from the 4-year high, but it's also below where people got excited about Zoom holding Anthropic stock. So I have my eye on this because if Zoom could get back above this, I want to buy aggressively with the assumption that this time is different and it will hold that breakout. But right now it's back to bearish. It's below that support line and it's below its 50-day moving average support line, which again is that red line. Now, I did a short on Intel. I said Intel, ticker symbol INTC, was just getting started. Now it churned since I did that short, but slowly but surely you have to keep an eye on Intel. I'm telling you, the news flow continues to be positive, and the latest one was that Google's considering using Intel to produce its TPUs, its tensor processing units. The market it did go up about 11%, but it started to shrug it off. And I've been successfully trading Intel now that I'm paying close attention to the news flow and to the technicals. And so my latest trade was a call spread, and I took profits here today. Intel soared another 6.5% and is close to a new all-time high. So keep an eye. I'm keeping an eye on Intel every day practically now because of how much I missed the earlier run-up. Okay, I earlier said consumer stocks. There have been some key consumer stocks that I've noticed have been catching a bid. I think what's happening is that, it's summertime, tech is weak, people have some cash on hand and they're looking for bargains. There are some bargains, I guess, to be had in the consumer-facing stocks because they've been beaten up. But I'm going to start with the stock that has rarely been weak. This is TJX Companies, ticker symbol TJX. They have TJ Maxx and Home Goods stores. The fund began late last month when it jumped 5.7% post earnings. I've said that this is a key indicator of retail because if TJX can do well, it can drag the rest of the sector up. You can see that there was this big fade. I missed buying this fade from earnings, and then it just has been rebounding strong ever since, and it's now at all-time highs. That's a great sign for retail. Now, let me show you some other stocks that have been on the recovery mode, consumer-facing stocks. For instance, CarMax, ticker symbol KMX. This is a retail. You don't have to read all this tiny text, but if you want to pause and read that, this is an important marker because Oppenheimer, way back when CarMax collapsed 20% post earnings, this was in September 2025, gave this explanation that says they're repositioning on CarMax and they're thinking that it's going to take time. They downgraded the shares to perform. Well, guess what? CarMax has gotten over this close twice, now 3 times, and each time it gets a little bit higher. So CarMax is sneaking a recovery. It's been very slow. I now want to buy this stock, or basically, actually I should say start accumulating it because I think it's going to just keep grinding higher. I'm keeping an eye on this one. Another sneaky recovery stock, Cracker Barrel, ticker symbol CBRL. Hopefully I don't need to go over the controversy from last summer when they changed the logo, then they had to change it back. Well, the stock is still well below that drama point, but what's interesting here is that right below earnings, nice confirmed 200-day moving average breakout. I missed it. I actually would have bought this regardless of the earnings because you can see I didn't draw a box, but the stock has been sneakily bottoming out ever since November. And now with this big gap higher on earnings, 22.5%, I just said I did a no regret buy. I wrote a blog on what a no regret buy is. I just bought a few shares so I can make sure I'm in this if somehow Cracker Barrel never pulls back from this point. I think it will. It should because it's overextended, and I will start accumulating the stock at lower prices if the market grants that. Okay. Wingstop, ticker symbol WING. I've always wondered why the stock was so high. Well, now it's not so high anymore. And what I mean by so high, it created a double top. I think this is way back in 2024. It got almost to 450. Now the stock is all the way down at 162. And you could see that there was a big breakdown this spring and then a false bounce where Wingstop was trying to catch a bid with the market, stopped cold here at 50-day moving average resistance. Let me put a little red triangle there. Let's see. Actually, I'll just leave the triangle there. No need to color. You know what I mean. Faded from the 50-day moving average resistance. It did it again over here. But guess what? Now it's broken out. Okay. And that is looking like a sneaky, sneaky, sneaky recovery right here. It's not confirmed yet. It needs one more positive close. But if it does that, I'm going to put Wingstop into accumulation mode. Again, just on the technicals and noticing how the market seems to be sneaking into a few consumer facing plays that have been beaten up or the ones that have been strong for quite some time. Let me just finish with Red Robin Gourmet Burgers. I've written about this several times before. It is now, it looks ready to launch into orbit as it pivots around its 200-day moving average. You can see that here. I drew this box around this pivoting that it's doing, and it looks ready to finally continue higher. And just as a reminder, this stock, of course, has not done well for quite some time. So if Red Robin is in a recovery mode, there could be a lot of upside here. It's already bounced a lot from the bottom, which was around, let's just call it 250. So granted, it's already gained a lot, but of course, there's potential for a lot higher. All right. Thanks a lot, everyone, for checking out this latest edition of The Market Breadth. Please like and share this content so the algorithm knows it's up, and it motivates me to continue to, post this content. Subscribe if you want more like this. And as always, you can put comments and feedback down below. I always like to see that, and I will respond. In the meantime, take care, stay safe, and I've given you some key things to keep an eye on. But of course, please invest and trade according to your own risk tolerances and preferences.